Question 1. For each transaction, select the appropriate accounting concept, explain the correct accounting treatment, and describe how ethical and professional accounting practices should be applied in financial reporting. On January 5, 2025, Nova Smart Enterprise purchased a van for $130,000 by bank. At the end of the year, the market value increased to $135,000. The accountant was instructed to record van at $135,000 as it's the current value. The van shouldn't be recorded at $135,000. It should be recorded at its original cost. That is because this transaction involved historical concept. This concept ensures reliability in financial reporting. Market value is subjective and can fluctuate, which leads to inconsistency financial statement. Maksudnya, harga van tidak sepatutnya dicatat sebagai 135,000 iaitu harga pasaran pada akhir tahun, kerana harga pasaran sentiasa berubah. Apabila harga van dicatat mengikut harga pasaran, buku perakaunan menjadi tidak boleh dipercayai. This is because it will overstate asset value. Therefore, this action violates integrity and objectivity. Next, on 18 March 2025, owner used company bank account to pay $8,500 for its personal renovation. The payment is office renovation expense. For the answer, this transaction should be recorded as drawings because this transaction involved business entity concept. This concept separates the owner's personal transaction from the business. Personal expenses are not business related and shouldn't be recorded as a business expense. Recording the owner's personal transaction as a business expense overstated expenses and understated profit. The ethical issue is that it violates integrity and professional competence because it's fraudulent.
Next, on June 28, 2025, the company completed repair service worth 16,000 ringgit for a customer. The customer settled to pay on 20 January 2027. The finance manager decided not to record revenue until cash was received. For the answer, the revenue should have been recognized when earned on 28 June 2025. That is because it involves accrual concept. This concept requires transactions to be recorded based on verifiable evidence, for example, invoice, receipts, and checks. The revenue should have been recorded when the service is completed, regardless of when the payment is made. This is because delaying revenue recognition understates revenue and misrepresents financial record. This violates transparency and professional judgment. On September 10, 2025, a customer that owed 25,000 ringgit was declared bankrupt. The management believed the customer eventually might pay. Any possible loss was not recognized in the financial statement. The loss should have been recognized immediately as this transaction involves matching concept. This concept requires expenses to be recorded in the same period as related revenue. Therefore, the company should have written off the payment as a bad debt expense. This is because not recognizing loss overstates assets and overstates profits. The ethical issue is that it violates professional ethics because it is deceptive and this can cause lack of trust from stockholders. On 31st December 2025, the company has consistently prepared its financial statements for the period 1st January to 31st December every year. This year, the financial manager wants to postpone some utility and maintenance expenses incurred in December to January 2025. This is to report higher profit in 2025. The expenses should have been recorded when it incurred because this transaction involves accrual concept. This concept requires transactions to be recorded when it occurs, as explained previously. Other than that, postponing expenses artificially inflates profit and is misleading. The ethical issue is that postponing expenses is a fraudulent practice. Additionally, it also violates integrity and professional ethics.
Now I'm going to explain about the question 2. Question 2, it's all about the Fresh Bite Catering Enterprise transaction. The first transaction, its owner invested 40,000 cash as initial capital, and then the date is 3 June 2026, and then document details is a bank deposit slip and then capital distribution record, and then received from business owner, paid into Fresh Bite Catering Enterprise bank account, and then payment method cash deposited into bank. and then reference no, bank transaction, bank transaction receipt, and then prepare and then received by authorized employee. The first transaction, accounting treatment, the business received 40,000 in this bank account while the owner's capital increased by 40,000. And then ethical and professional consideration, it's the accountant must ensure that the 40,000 was actually deposited into the business bank account and must retain the bank in slip and the bank statements as evidence. The transaction must not be recorded as sales revenue because it represents the owner's capital contribution. That's the transaction one. And then the second transaction, it's about the purchased kitchen equipment on credit. It's on 5 June 2026. They are invested. They are purchasing. The costing is about the 12,000 from Kitchen Pro suppliers STN and BHT on 30 days credit terms. And then the documents details, supplier invoice, and then buyer is Fresh Bite Catering at the enterprise. This description, kitchen equipment, and then the amount is already I told already 12,000, and then the due date 5 July 2026. The payment status is credit outstanding, and then the accounting, treatment. The kitchen equipment is accurated as a business asset while an amount of 12,000 becomes payable to the supplier. And then ethical and professional consideration. The accountant should verify the supplier invoice against the equipment received. The equipment should not be recorded as a cash purchase because no payment was made on 5 June. The 30-day credit arrangement must be clear recorded so that the liability is not omitted.
And now I'm going to explain about the transaction 3, which is catering services provided on credit. And these are the details to be included. The first one is the document. The details is sales service invoice. The invoice date is 10 June 2026 and the customer is ABC Event Management and the supplier is Fresh Bite Catering Enterprise. The description is catering services and the amount is RM 6,500 and the payment terms is payment in July 2026 and the payment status is credit and outstanding and the invoice number is Fresh Bite invoice number and the due date is as agreed with customer and the authorized by responsible employee. The accounting treatment Fresh Bite has provided the catering services and learn RM 6,500 even though cash will only receive in July. Therefore, the amount is recorded as a revenue and the receivable. The journal entry, Dr. Trade Receivable. ABC Event Management RM 6,500, CR Catering Services Revenue 6,500. The ethical and the professional consideration. The accountant must issue an accurate invoice and record the revenue in July because the catering services were provided in June. The accountant must not delay recording the revenue until July supply because payment has not yet received. And now I'm going to explain about the transaction 4, which is paid RM 2,000 rent through online banking. And appropriate source document, these are the details to be included. The document is bank payment voucher and the date is 5th June 2026 and the payee as business premises landlord and the purpose is rent for June 2026 and the amount is 2,000. Payment method is online banking and the bank reference is online transfer or reference number and the supporting documents are rental invoice or receipt. Payment status paid and authorized by the authorized business representative. The accounted treatment. The RM 2,000 is a rental expenses for June and is paid throughout the business bank account. And the ethical and the professional consideration. The accountant should retain the online banking confirmation together with the landlord invoice or receipt. The payment should be probably authorized and recorded only once. Payment must not be mixed with business expenses. And lastly, I'm going to explain about the transaction 5 and it's about the purchase raw material and the paid cash. And these are the details. The first one is the document. The document is cash purchase received and the date is 20th June 2026 and the supply is Fresh Supply Enterprise and the buyer is Fresh by Catering and Enterprise. The description is raw material which is fruit ingredients and then the amount is RM 3000 and payment methods is in cash and the payment status is paid. The receipt is supplier reference number and then the receipt by authorized Fresh by an employee and the supporting documents are cash payment voucher. And the accounting treatment is the business purchase raw material which is the ingredients RM 3000 and pays the supplier immediately in cash. And then the ethical and the professional consideration, the accountant should obtain an original receipt or cash invoice from the Fresh Supplies Enterprise and prepare a cash payment voucher. And then the amount pay must agree with the supporting documents and cash transactions should be recorded immediately to prevent errors and the omission or imissue of cash.